Linqto is the motive force that's brought all this knowledge together on this GIC stage today for the single purpose of educating our investors and growing our loyal community. So we're welcoming back Bill Sarris, Linqto CEO, and Joe Endoso, our COO. And Bill and Joe are going to talk to us about providing liquidity in an otherwise illiquid market, what this means and how it's done. So Bill and Joe, thank you so much. And over to you guys.
Thank you, Irene.
Thank you, Irene.
So Bill, I thought it'd be interesting if I just kind of lobbed a bunch of questions at you. And these are probably questions that come up in the course of just, introducing and greeting new customers to the investment platform and to the investment community that we're building here at Linqto, and figured it'd be great if you could field them as the founder of the company and having been here from day zero. So one of the most common things we hear from customers is the fact that, because private markets have grown so tremendously in terms of scale and therefore the amount of capital interested in being exposed to these markets, that there's now a plethora of players involved in private markets, right? And I think it would be good if you maybe explained a little bit, how is Linqto different and unique from all those other players in our market? Because sure, there's a lot of people that are, trying to provide liquidity to private market, private equity shares, lots of people that are turning around and making those shareholdings available to outside investors. But how's Linqto different?
Yeah, good question, Joe. Actually, that's probably the number one question that I get as well, often from all of our investors. And it's wonderful what's happening in the private markets. When we started trying to solve the problem of liquidity in the private markets and the idea of making private investing simple, that presupposes that it is complex to begin with. We kind of all knew that because we've been in the secondary markets for a while. And our motivation was to become kind of like what Coinbase did for crypto, what Robinhood did for the public space. We wanted to democratize and bring that private space down to the level where average investors, in our space, you have to be accredited, but still an average accredited investor might want to put in $10,000 or $20,000 into an individual investment. And this just was impossible in the secondary markets for a number of reasons, and it had to do with the models that currently exist. And not to take anything away from those models, because we are consumers of those models ourselves. And so it's good that that whole ecosystem and structure has created around the private markets. So I think, when we talk about the different models, Kelly Rodriguez once referred to it as a co-opetition. We probably put $30 to $50 million worth of transactions through Forge and SharesPost last year. They're important to us in our ecosystem to make it work, but they operate in a different way. And so there've been a lot of news over the last year or two. Private markets, we know, are burgeoning. The number of unicorns when we started was 465. Now it's over 900. Companies are staying private longer. There's much more need for all of this. And so it has generated a lot of fury, a lot of activity, a lot of really great stuff in the marketplace. But that is a primary question. When Linqto looked at the problem and wanted to solve the problem of, it's not just bringing it down to the democratization level. I think the bigger thing we saw was the trading platform itself, a T0 platform. I mean, when you're in public markets, you go to your Schwab account or your Fidelity account or AirTrade or whatever, and you make a transaction. And in crypto, you're used to going in and you buy your Bitcoin or you get your XRP and you make a transaction. And the same thing with commodities and the same thing with metals. And pretty much every market has that kind of a T0 trading platform. But the underlying structure of how secondary markets works kind of obviated that. We weren't able to get to a T0 platform. And that's probably the biggest success that Linqto's had in the last year and a half, is we have created a T0 platform on one side of the transaction. If our investor members come in and want to invest in something, they can get it at that moment. That has to do with our model, which I'll talk about here in a second. But also there's another side of that, and we'll get to that in a second, and that's the subject of this panel discussion, and liquidity, and what does liquidity mean in that market space. So first, let's talk about secondary markets. There are really three models that are out there. One everybody knows, kind of used to, is the broker model. Forge and Shares Post and Equities and Zimbato and Manhattan Ventures, NASDAQ, private markets. I mean, there are a lot of systems that have been good. Secondary markets are not new. We've been trading in them for a long time. The right to be able to sell your shares if you're an early investor in the open market was granted in 1933 with the Securities Act. So it's something that they're and capable, but heretofore has been kind of inaccessible. But still, there are players in that market. In the secondary market, the first and most major one that we always think of is the broker model. And simply they go out and find people who are either early executives or early shareholders in private companies, list their securities, and then go out and find a buyer, match them, get into a contract stage. That contract then has to go back to the issuer, the company. There's generally a ROFR, right of first refusal. Could be the company, could be major shareholders as well. Sometimes it gets held up for 30 days, 60 days. It's part of the complexity of the process, is that long process that it takes to make one transaction. But that's what brokers do, and that's what they're really very good at. I think when you describe the broker model and what it means to us and what it means to our investor members, probably the best description that I can think of was one that was given on the commodities markets. It was given by two brothers, Mortimer and Randolph Duke. I don't know if you guys remember Trading Places, but they're talking to Billy Ray Valentine about how the commodities market works. And Randolph is explaining all of the things about commodities, and he turns to Mortimer and says, and tell him the best part. Mortimer says, yeah, well, whether the price goes up or the price goes down, Duke Brothers makes its commission. And you know, that is how the broker model works. So for us, we're professional buyers. We go out and buy stuff. We like to go through brokers because we know what we're doing, but we always realize when we're going through the brokers, their incentive is to make the deal and have the commission happen. And that might be at odds with us as an investment firm, as an investment vehicle. So we keep that in mind, and that's part of our risk analysis as we go through the process. And that's kind of the broker model. As I said, we use it quite a bit. We not only source our own people want to sell us shares, but we go to all the brokers in the market and see what they have. And if they have something at a decent price, we'll go into that process and buy it. The second model that's out there is the fund model. Everybody's interested in and understands funds primarily through the primary market. A lot of people have been involved with investing in funds, and that they go make primary investments into companies, but a lot more of the secondary market has turned into funds as well, where funds are created to just go out and buy stuff in the secondary market. The fund model that you're all familiar with, you give your money to someone else and they go out and make the choices of what they're going to buy. Some of the unique pieces of the fund, and again, we use the fund model too when we believe in the fund model. One of the opportunities you'll see today on the platform is blockchain co-investors, and that's a fund, and our investors can go and invest in the fund because there are a lot of reasons to get involved in a fund, even though it's not our model. But when you do, the differentiators there are, you give up control of choice. You're not going to decide what to buy. You're going to give your money to someone else. They're going to decide what to buy. They're using your money to buy. You put your funds in advance, and then they go out and they buy the stuff. Another unique piece of the funds model is they get fees for doing what they do. And then also when you get to the end, they're sharing what you make at the end. And generally, they don't have any skin in the game. That's not necessarily always true. And a lot of times the fund managers themselves will have their own individual money in it. but it's not operational for the sake of investing in properties themselves. And those are the differentiators between those two models and the Linqto model. To probably, other than our technology and all the things that we did to make it accessible, the biggest piece is the business model. And the differentiator is we buy these products. We go out, we scour the markets, try to find secondary, we get rofered out, we lose some of them. There's a lot of expense about the contract and the time and the resources. But after we buy the products, then we form them into a special purpose vehicle, and any of our investor members can come in and invest in that product. When they get there, the difference is it's already there. You don't have to determine today what's Ripple going to be worth 2 months from now, which if you went through the other models, you have to predict the future, because you're not going to end up closing that transaction for a month or two. Whereas today you look at it, you say, okay, this is available. If I push the button, I get it, because you're investing in the security that we create and not the shares of the company. And that's probably the biggest differentiator. So I hope that's a bit explanatory, Joe, and I don't want to take out too much time on that, but I think there's a lot of talk in the marketplace, especially, we're new, we're different, we're providing liquidity, we're doing all these things, but the model is not necessarily changed. It's more like building a better mousetrap than it is disrupting the space and coming up with a new model. That's the primary differential for Linqto.
Yeah. And what are the implications, do you think, Bill, of that new model, right, that we've built at Linqto on now our ability to hopefully democratize this space and really open it up, right, to millions upon millions of people who are accredited legally, can invest in this class of assets, but just historically have found it extraordinarily difficult to do that?
Well, I guess I would say, Joe, I would go back to what we just talked about, what we said, and how that relates to why this is the only model that can bring it down to an affordable space. I mean, there are other models that are building on accessibility and other pieces of it, but how do you make it affordable? The system itself does not promote that. The system itself is an oligarchy. Let's go back to take the brokerage system. A broker, somebody comes to me, they want to sell 2 million shares of whatever they have. As a broker, I make my 2%, 3%, 5%, whatever I'm charging, whether I sell that to one person or 25 people. Why am I going to go out and make 25 deals when there are enough institutional buyers out in the marketplace that I can go out and make one deal and sell the whole batch? So there's no motivation at the brokerage level to democratize the space and bring it down to that smaller level. So that's one of the pieces of it. And probably even more important is, even if you could do that, and the brokers out there were willing to sell you $10,000 worth of something, it would never pass the ROFR of the issuer. Because remember, these are private companies, and the Jobs Act allows there to be 2,000 shareholders in that company now instead of 500, but it's still 2,000. If you kind of take a look at what's happened, just looking at Ripple as an example, the product that we're offering today on special, Linqto is on the cap table of Ripple's 35 times. We've brought 35 separate blocks of Ripple. Our members, we've had 860 members make 1,474 investments in Ripple. Now they couldn't have, that Ripple would have never allowed that to happen, because that would bring them over 2,000 investors, and all they would have done was, got 1 million more shares out of it. So what Linqto's done is abstracted that. We sit 35 times on the Ripple cap table as one company. So for Ripple, when some of their early shareholders or members of, we've bought shares from their former general counsel and their CFO and the CTO and their outside counsel, and when people come to them, early shareholders, they'll refer them back to Linqto because that helps them. It's not a separate transaction. It's just the same entity over again by the share. So that helps us. We've abstracted 860 different investors into one investor on the Linqto Captain. And it's a key reason why the process works, not only in terms of making it accessible that we've done with technology, but making it affordable at our level.
Yeah. Let me ask you a question to go back to the whole liquidity theme of this chat, Bill. So, to use your example, I'm one of those 860 odd Linqto customers that's invested once, twice, however many times, right? And accumulated a fair amount of exposure to Ripple through the SPV. And here I am, I'm sitting and waiting for the company to do their big liquidity event in the public market so that my shares can also, my shareholding can become liquid and I can realize my capital gain, right? What's the thinking at Linqto on solving the problem for that investor if for whatever reason they either decide, look, my Ripple holding is already appreciated enough in the private market, I don't need to wait until the company goes public, or perhaps something bad happened in their life and they just flat out need the liquidity because they've got some medical bills to fund or something like that. How do you solve that problem?
Yeah, I mean, that's such an important question. I think I would step back a step to first define liquidity. That's what our topic is about today. The word liquidity is thrown about, I'd say at least once or twice a day. I read articles that talk about people providing liquidity in the secondary market. It's already there. Linqto's been doing it for a year and a half. If you use their definition of liquidity, that definition of liquidity is allowing early shareholders, early founders, early employees to get rid of their shares by selling them in the secondary market. That's that. According to that definition, we've got 118 people out there in the world that we provided liquidity for. It's not our members, it's the liquidity and that's part of the ecosystem. And we love the fact that we have done that. Forge could brag about a much larger number. And all of these companies are providing liquidity in the secondary markets to those people who first own the shares. But then you go out and buy them through a broker and you own the shares, and now you're on Ripple or you're on Uphold's cap table, or you're on Kraken's cap table, whatever. How do you become liquid with those? You kind of go through that same process again, and you can't be stopped from doing it, but you still have to go through the process, and you have to go back to a broker and you have to agree to sell at a certain price. They got to find a buyer who's willing to pay that. And then you've got the ROFR period and all of the company restrictions you might have as it relates to those investments. That's kind of the difference in our investment and why we will be able to provide what we refer to as liquidity. It's always been one of the three pillars of our platform, liquidity. We started out from the very beginning with just got a slide here somewhere. Let me just find it and pull it up. As I think it's important to understand the three pieces and not just one that we started with on the platform will provide. The first piece was accessibility. If we were going to democratize this space, these opportunities could not be available to only the oligarchs, to only large institutional buyers who could pay $5 million and buy a block. We had to make it much more accessible than that. That's the technology piece, and everybody's familiar with that. And the Linqto investment platform was conceived to provide accessibility. The second piece of it's not about technology. Affordability, we have already provided to our people as well. And that's, as we just discussed, the Linqto business model. Because of the Linqto business model does what it does, we are able to sell. And I had a question chat earlier today that I answered from one of our people say, hey, how come it has to be $10,000? Why can't it be lower than that? You know, we are advocates that it should be $5 or it should be $10 or it should be as low as possible. We do have to meet the regs, and not only the regs of the SEC, but the regs of the IRS. And every one of these series that we create has a maximum number of investor members of 99, according to investor regulations and the IRS. And that means we have to create a new entity. We have to do all the legal work for a new entity. We have to get a separate tax ID number. We have to file a separate tax return for every one of these series that we do in order to stay within the regs. And it would not be affordable any longer to our investors if we went below those thresholds because of the cost of doing the deal, which would have to be then put back into the deal itself. And so every person on a lower end would pay a lot more money because of the cost of doing so many different series. So that's the affordability piece that we built into the Linqto business model. But the exciting part is the liquidity piece. And this deals with the Linqto alternative trading system. We've got an application in now to FINRA for an ATS. And once we build out the ATS, and this has been the idea of the platform ever since the beginning, our own blocks and securities and pieces that we've created on the platform will be able to be resold back through to the platform, through our other members. And when we get to that piece, we will have that created, all three pillars. And that's really exciting. We've been working on this for 2 years since we started the platform. We have designs, engineering. We've got the FINRA application going. You know, there are a lot of pieces to bring this about to get to the end game, but that is our true end result that we're looking for. And that was the Holy Grail. We started with the idea of liquidity in the second market. And if you understand it, there really is no other model that can provide that kind of liquidity on a T0 basis. I mean, if you can do a full trading platform, people can come in now to our platform and get what they want. If they got an uphold wallet, it can actually be truly T0. They get it right at that moment. But on the other side, if you were to buy shares, say through a broker or through a fund, you'd still have to go through that 6-week, 8-week process. You'd be reselling those shares. That person you resold them to would have to go through the process you went through all over again in the ROFR process and all that. What our investors own are shares in an SPV that own the securities. And so because of that, we can make the rules, and we say, so long as the person you bring in is an accredited investor, and you don't split up your block because we have to maintain the 99 investor rule in the block, you don't even have to use our platform. You could do that today. You could go out and resell that. It's already liquid because we made that decision from the beginning. But once we have the platform in place, so it's easy, and we're using our entire investor base and all that, we will be the first system that actually provides what I would consider to be liquidity in the second market, the true liquidity that we always talked about doing, that you and I discussed over a beer, Joe, I think 2.5 years ago. So yep. It's, finally going to come about at some point, and it takes patience, and it takes the will of some of the great people we've got on the Linqto team, but it also takes the support of all of our investor base, and they've been huge for us. They've just been really good people. So that's a testament to you, Joe. Thanks.
Well, it's to everybody on the Linqto team, and most of all to our customers themselves who have, been growing themselves organically because they've been referring friends and family and colleagues, and that's just the most gratifying thing to see. But yeah, I'm super excited, as our customers, Bill, about that next development in Linqto's life, which is to create a deep and vibrant secondary market for the SPV units that our customers invest in from the get-go, and having the ability to liquefy those holdings if they want to, either for profit taking or simply just to get liquidity, right? That would be a tremendous development. We all agree. What are your thoughts, Bill, in closing out this discussion on the long term for Linqto? Where do you see Linqto, 3 years from now? I mean, in our space, 3 years is the long term, right?
Yeah, sometimes it's hard to think about 1 year. Sometimes everything just happens so quick. But we saw a lot of it today. I mean, one of the great things about these conferences is it also stimulates us thinking about what's the next move. I mean, I was fascinated by the discussion that Matthew just had with James about NFTs, and what's going through my brain as an engineer is, okay, how do we ratchet that up and get it on the platform? We've got a lot of real estate investors who are talking about when are we going to have real estate capabilities. The big move, the real big differential, I think, in this total space, just in private equity as it relates to pre-IPO companies and things, put the entire space is tokenization. When we have a government and regulators and people who've caught up with where we all were in engineering 5 years ago, it will be very common for everything to be tokenized. And if we didn't have to go through creating the huge amount of expense that we create to create even one series on the platform, because we could just simply tokenize the assets and they can be freely tradable on a platform, that would then bring the cost of investment down even another level. And that's part of what Linqto has been doing out in the public world as well. We're strong advocates for accredited investor standards being changed so that people don't have to be rich to be an accredited investor. And some of that we've just from our lobbying, you've seen in the last year where they now can become accredited because of their knowledge. That it's just starting, but there are others in the SEC who are advocates of that as well. And we've been working toward eventually democratizing that space at the regulatory level as well. So all these things will transform and they'll happen in the future. And we're kind of myopic. We just have our head down and whatever we need to do today to get to tomorrow. And then we listen to all of the trends and start thinking, more Karim at the strategy level and you, Joe, at the investment level, start thinking, and then you guys come back to me and give me advice and I go back to the engineering team and we build it. But that's kind of it's an iterative flow. We're just going to keep, doing new things all the time and staying in front of where the market is and having the fun that's involved with this journey. I mean, this is a very, very fun journey. It's been exciting, I think, for all of us. And hopefully we stay on this journey for a long time to come.